All right, so I think you guys might like this one. This is going to dive into Gary Gensler's mindset, and is he professing or possibly manifesting out what's going to be happening in the markets very soon? It's an interesting one because a lot of this lines up with not only where the macro markets are, where consumer markets are, but also where maybe a recovery might be in place. We'll break it all down for you. It'll make sense. My name is Paul Barron. Welcome back into Tech Path. Let's get into a couple of points here. Before we get started, though, I want to thank our sponsor, iTrust Capital. If you're looking at long-term holding, and a crypto IRA is one of the ways you want to do it. This is one of the best spots to jump into. Of course, just go over to the iTrust Capital website, itrustcapital.com, and you can get into a variety of different types of digital assets, including altcoins, precious metals, gold, silver, and obviously Bitcoin and Ethereum. And the biggest thing here, 7.6 billion in transactions, over 200,000 accounts out there on this. So make sure, this is the time of year where people are doing some tax planning. So consult your tax attorneys, your CPAs, all that. Is this a good play for you? Click the link down below if you want to get started. All right, let's go into a couple of points, and I'll lead off with this tweet right here, which is really kind of the cover of what we're talking about today, and also why this could be giving us a little bit of manifesting your future around where the markets might be. And I'll explain all this. But anyways, here's Balashunas coming in right here. Balashunas. Oh snap, SEC tweeting about educational materials warning on crypto investing, which is something they also did ahead of the BITO launch. So remember that. So they have a tendency here, meaning Gary Gensler has a tendency to almost want to tell you what's happening and where it's going. And he's done this before. There's been other factors that when they put out little educational snippets, and I think everybody's kind of had their chuckle with Gensler and his training videos, office hours with Gensler, kind of funny. But maybe this is it. Maybe this is the point of him saying, okay, be aware of it. We told you. Okay, now we're going to approve these things and get rolling. Now, markets and the jobs reports came in. I did a tweet this morning, and really this was a breakdown on some of the elements that I think are important. U.S. employers beat expectations, added 199,000 jobs in November. I think impact on crypto is still showing a continued bull run. And here's my thesis on this. There's a variety of things. One, Bitcoin is still holding, even though jobs numbers came in somewhat flat. And remember, on the jobs numbers that we had the United Auto Workers go back. So those were jobs that were most likely being qualified in these reports that could be padding that. So I think the jobs is still somewhat flat, if not under what their expectation was. ETH sentiment, though, is performing really well. Could indicate more movement on upward trends in altcoins. Now, there's some things here to kind of focus in on. Average hourly earnings ticked up. That means people are getting more money. Labor participation ticked up also. That's a big deal. And then the 30K in auto workers returned. But the other thing is that when you look at the strong report for jobs, this makes the Fed's job obviously a lot harder because you have to understand they're looking at two data sets right now. Inflation, obvious. Jobs, of course, is one of the factors that if we continue to see a lowering sector in terms of job availability, the impact on that in terms of Fed's decision to go forward in terms of lowering rates becomes much faster. Other thing that plays into this, and this is a note right here, consumer credit. Consumer credit came in and rose to 5.1 billion versus 8.5 billion in October. That is a big deal. So meaning that consumer credit is actually slowing, meaning people using less credit because they're at a max out position on their credit cards. So that in itself will have an effect. I think the two key measurements that are going to help us understand, including the Fed, is what we'll see in terms of the retail numbers, which will be coming in here in a couple of weeks. This holiday is going to be huge. So those first week numbers that we see in January on retail, I think will give us a lot of ammunition for maybe a first quarter rate reduction. If we get a first quarter rate reduction, we are going to see, as Mark Yusko would say, face melters for sure in the market. So a lot of that playing into this. And if you look at just in general, Bitcoin, I'll kind of zoom out on this right here. This is ETH, but the constant upward trend that we've been seeing in the overall sentiment. This is our market sentiment index. And right here is Bitcoin, same kind of scenario, all coming down in off of really mid to late November. And then we've seen this upward trend. much like what we've seen with the S&P. So a lot of factors playing into this. Bitcoin, of course, this headline remains stable even as the U.S. employment drops. Again, I think this is still just a number that is somewhat inflated in terms of the actual job variations there. But a couple of points. Despite the positive workforce indicators, Bitcoin remained undeterred. Lack of expectation correlation may signal a mature market for Bitcoin. So maybe that's it too. Maybe Bitcoin is at a point now where it has truly detached from traditional markets. I still think it has a lot of connection to traditional markets overall, so I'm not necessarily buying that. I believe it's a scenario that this is a bull run and we are seeing sector improvements out there around the economy that will continue to move. And I think the thing that we talk about often here on the show, and if you've been following us for any time, maybe you're brand new, first thing I would say is subscribe to the channel. Just go ahead, click that little subscribe button right now. Take some time. But you would have heard, if you were here, a year ago, we were pushing into get ready toward the end of this next year. And the goal was by then, the lagging indicators, real estate has happened, jobs will happen, and credit, which is the one that I've often said is going to be the indicator. I think this new credit report is the thing that could be pushing us over the line in terms of the Fed saying, okay, we've tightened enough. Finally, consumers are going to stop this spending like, as Jamie Dimon says, like spending like drunken sailors. So that all, I think, plays into a good sign here. Now, let's go forward into another article real quick. Fidelity Investments breaks new ground with a spot Bitcoin ETF listing on DTCC. This, remember, also BlackRock going into that. A couple of points I want to make here in the article. ETF identified by the ticker FBDC represents a crucial step in evolving the landscape of digital assets. Yes. This move may not only underscore Fidelity's commitment to crypto, which I think Fidelity is secretly an ETH maxi. That's just my thinking. Ethereum's already available over on Fidelity right now. You can go buy that and Bitcoin. I hold it both on Fidelity. And it's interesting because with them being able to move into this market, I also think that Fidelity's not only management, but also their demographic, and I'll talk about that in a second, is much younger. And that is going to play into a much bigger run, maybe this bull run, but definitely on the next bull run. So you're maybe entering crypto for the first time. Maybe you have entered it at the right time. A couple other points. The SEC has extended decision-making periods to the legal maximum for such apps. Obviously, we expected that, reflecting its careful stance. All of this could change, though, really boiling down to a couple of things that are going to be coming up, obviously, in January if we get a Bitcoin spot. This integration is further reinforced by the interest of other major players, yes, alluding to an increased legitimacy of cryptocurrencies within the established financial systems. This, to me, is the killer point, is that we have finally seen Wall Street at the table. And I know everybody's been saying, yeah, even Paul, last time we talked about institutional adoption, and that was a bunch of BS. It did not happen. Now we are there. We are literally at the gates of hell. So we're going to see if this makes a difference come January when a Bitcoin spot gets approved. Now, Fidelity Investments' successful listing of the spot Bitcoin ETF on DTCC is more than just a product offering. It represents a significant milestone in the maturation and the institutionalization of the cryptocurrency market. Totally agree. I think these are the things that just the next step in the validity of where crypto is going to become the 12th market sector out there. So a big one for sure. Spot ETFs could see a $40 billion in inflows. This is coming over from VanEck. A couple of points I want to hit on here with VanEck. They kind of talk about what I think, and I don't know, that's a lot of inflow in a very short period of time. But I believe, and I think they're going in this direction, there's a lot of pent-up demand for that. Remember, we get a positive print in the first quarter, you are going to see so much money on the sidelines. I would say close to $1 trillion on the sidelines right now, but get active, because right now we're talking about $5 trillion on the sidelines. You're going to see $1 trillion come into the market absolutely like a landslide. So just think about that. ETF mutual fund manager VanEck, around $1 billion in inflows over the first few days after the launch. That's what their expectation, around $2.4 billion within the quarter. They also talk about the relative ratios of the SPDR. This is in reference to the gold ETF adjusted to the 2023 dollar value. After its launch in November, the gold ETF witnessed inflows of about $1 billion within the first couple of days. And then VanEck also pointed out that the figure increased to almost $2.2 billion by the end of Q1 2005. Money difference, market difference, exposure difference, yes, there's a lot of variations that don't necessarily line up, but it does show the appetite. And if it shows the appetite being positive, all this is good for what's happening with crypto. And here's the other thing that VanEck, I think, hits on, and that is that their Bitcoin ETF ticker will be called HODL. So what does that mean? This means they understand the DNA and the makeup of this next generation investor. And that is more important, I think, than anything right now. It'll be interesting because I'm going to give you guys a cheat sheet. If you watch the marketing tactics of VanEck, Fidelity, BlackRock, 21 Shares, all of the players, Galaxy Digital, you name them, watch their marketing tactics. If they are spinning their marketing tactics to platforms that are attracting Gen Z, Gen Y, then you know that they understand where this is going. If they are spinning it into traditional mainstream media, then maybe that's the split they need to get to the boomer money. But I am going to be watching that very closely because I think that will give us a lot of indicators. This is just a gold spot price to show you the example of what happened when that launch occurred. Remember, this is all flat zone right here. Flat zone from 1979 all the way into the early 2000s before we saw the spot ETF launching in 2004 and then a skyrocket. And then, of course, we've seen the uptrend from there on gold. So that, if that has any bearing whatsoever on just appetite, I think is the key. Back to my point, 94% of crypto buyers are Gen Z millennial, but Gen X is also outspending them. Now, remember, Gen X is that's my generation, a small generation, but very tech savvy, very leading edge, which is not a lot of us. But a lot of them are in their perfect years of income earning. And I think that could play into it because it could mean they're ready to go into that higher risk category because they can still afford to do it. So that's another factor that hits on it. A couple of points I want to hit on here. 94% of crypto buyers 18 to 40. Look at this. This right here, my friends. This is what VanEck, BlackRock, 21 Shares are all after. And then you've got Gen Z running in right there. There's Gen X, but they're spending a lot. And then the boomers, I think, will come into the ETFs and lag their way in. But I think the big market right now is millennials 25 to 40. That is a big earning years, and it's also the ability for them to go with some risk appetite. So all this plays into a good sign going forward. A couple of points here within it. They outnumber Gen X buyers 3.5 by 3.5, boomers by 14. Wow. Millennial buyers also outnumber Gen X by 15 and the boomers by 62. Just look at the volume. That alone should tell you. I'm going to zoom in on that for you guys. That alone right there should tell you what the tea leaves are reading in terms of future market interest and what they're interested in, which is why I think we've seen the birth of Robinhood, the birth of AMC, the kind of models that we've seen within the stock market and traditional securities, but also here in the new market, which is crypto and altcoins. All right, so let me get over to a couple other things here. I want to hit on altcoins right now. And this one right here is talking about this topic, which is, could altcoins surge in price after the Bitcoin Ethereum rallies this week? And this is where a lot of people are looking at. Remember, Bitcoin has now stalled slightly. If you looked at that sentiment chart I just showed you from my Twitter. By the way, if you're not following me on Twitter, just @PaulBaron. Go out there, most recent tweet. And the one that I put in there was the Bitcoin chart. And the Bitcoin chart showed that leveling off. And of course, sentiment was tracking with it. ETH, we were able to call in advance on the MSI. And it, of course, had its run to 24. So I think this could be an opportunity. And if you're following Solana, Avalanche, even Cardano, are all moving on the charts right now. So maybe this is the potential. And we're getting very close to that altcoin season. We've showed this to you guys before, very close. But as you can see, how much longer will altcoins trail behind before they make their move? This is one of the narratives that people are looking at. And I'd like to know, do you think we are in or nearing altcoin season as a whole, or do you feel like this is still the early days for altcoin season? Could we see some retracement? Drop some comments down below. Love to get your feedback on that. By the way, if you're not following all of our additional content, make sure and visit our Substack, which is pbn3.com. .substack or pbn3.substack, or you can go to pbn3.com. Either one, you'll find your way there. and you can join. And it's where our Diamond Circle lives. This is where we drop additional content. What you see right there is our Web3 Gaming Podcast by Kyle. And then we do, of course, additional analysis and material over there. So it's very easy to catch out over there. Last up here, I want to show one thing, and that is why I believe that this is remember the phases. Then they fight you, and then, finally we get past that. All right, well, the fight phase, I think, is ending, or I feel like it is. And this is a good example. Here, of course, is Miss Warren. Listen to what she had to say.
There's a new threat out there. It's crypto, and it is being used for terrorist financing. It is being used for drug trafficking. North Korea is using it to pay for about half of its nuclear weapons program. We can't allow that to continue.
All right, so you can see they're really grasping at straws. This, of course, has already been disproven, and she's still basically saying it. And we can't allow it to continue. I think this is the problem that traditional Wall Street and mainstream DC is starting to fail, because these talking points are being disproven left and right. And really, let's be honest, the biggest supporter of all these bad guys is a simple system called fiat. And we all know what that is. So think about that. Last up here, I want to hit on, of course, Mr. Novograts talking with Squawkbox and Sorkin here a little bit more about the potential of where this is going. Listen in.
Straight to the Jamie Dimon of it all. You watched that, you heard him say that, and you thought what to yourself?
He keeps doubling down, and he keeps being wrong. What surprises me is so many of Jamie's clients, right? Some of the wealthiest guys in America, Abby Johnson at Fidelity, Jeff Yass, Stan Druckenmiller, Ray Dalio, big investors all believe that Bitcoin is a store of value. We see it in our client base. Our trading desk has been busy with hedge funds buying. We see it in institutions buying. And so I don't know where Jamie gets off thinking that he's smarter than all those guys. It's the epitome.
He's also spoken out against carried interest, and most of his clients happen to be beneficiaries of that and enjoy that and think it's a great idea as well. So,
carried interest is kind of tax policy, and I actually kind of agree with Jamie on carried interest. So it's very different on saying what has value. Right? I think it's supreme arrogance to think he knows what has value, but all the rest of the people don't. And quite frankly, he's just been proven wrong. Bitcoin has way outperformed JP Morgan stock over 1 year, 5 years, 10 years, you name the period. People around the world believe in this. They believe in the community, the ecosystem. They see governments spending too much money, not just here in the US, but everywhere, and think you're going to debase fiat currency. And so, the story has kind of already been argued and won. When Larry Fink went on your show and said, I think you're going to see Bitcoin in all portfolios, I think.
That right there. Larry Fink, I think you'll see Bitcoin in all portfolios, which is the point I think that is the turnaround. Because remember, Fink was not necessarily a big advocate of crypto in general, especially blockchain technologies. Mainly, and Bitcoin mainly because of the ESG implications, and obviously his about face has changed. And I think it's the driver and interest by the investors. Diamond will come and bend the knee just like the rest. Eventually, there'll be enough investors within Goldman Sachs that they will start to push into the direction of actually adopting and understanding what tokenized securities are and/or investing into these assets from a digital assets perspective. So all this, as you guys know, I think we are at the early stages of the bull run. Now, can there be a retracement? Yes, there can be, of course. You should always be ready for those kinds of moves in the market. Do your research, continue to come into our show and many others out there that are great alpha spots for additional news and information and analysis. But the key here is just, try to play the market smart this time around, because I think you're going to have an opportunity here that maybe you have never seen in your life. So we'll get into all that. Like I said, join the Diamond Circle. It's very simple. Use the link down below if you guys want to catch me on X. It's @Paul Barron. We'll catch you next time right here on TechPath.